What's going on, guys? Welcome back to another video. This one is going to be an important one. I'll try to figure out what the title is going to be, but it's basically going to be about understanding the current narrative, and following along with current price action. Okay, and making sure you're staying aligned with it, and not trading against it. Okay, so I have up a chart in front of me. I'm not going to tell anybody what the time frame is, what the pair it is. All of that is irrelevant. We're just going to follow along with price. As you guys know, I've said it a million times before, price is fractal. Okay, so what happens on the daily chart will happen on the 15-minute. Okay, what is the difference between the two? One time frame, example daily, will take longer to play out than example 5-minute or 15-minute. Okay, but I just want you guys to remember and dig into your head that it is fractal. So whatever happens on the higher will happen on the lower. Okay, so that's why what I need to dig into your heads is the time frame on this chart in front of you guys right now is irrelevant. Okay, so what can we notice? We'll mark out some things here. Let me make sure I have all the things. Okay, cool. So first thing we can mark out here is price has traded below this low and this low to the left hand side. Okay, and then we had a reaction. Let me get a rectangle. We've had a reaction from this kind of area at the extreme to the left. Okay, inducing buyers. Okay, all this does now, if I can get my drawing tool out, all this does, this reaction here, when it fuels price higher, all it does is induce buyers, okay, and build liquidity where? Below this low. Oops, below this low here. So keep an eye on this low now. All right. After we get that reaction higher, what is it now done? It's taking out this high that led to this low. Okay. Why is this important? Okay. Retail traders, pattern traders are going to be looking for pullbacks into any of these imbalances, okay, and looking for longs back up. We understand that, so we can anticipate false reactions and trade accordingly, okay, and against them always. So again, we get this big bullish move up. Now, right away in your head, the sentiment is if you were in longs down here, for whatever reason, after this high gets taken out, you need to be managing your trade. Okay, look how this move occurred as well. It was just one continuous move to the upside. Okay, so there's just imbalances. There's not even any lows. You can see we've left relative equals down here. So all this tells me is where's the next draw on liquidity going to be? Keep an eye on this low down here. Okay, we'll change this up here to black, but keep an eye on this low. All right, so again, we trade up to this high and then we sell off. Come down to the low and respect it again. So we'll get a little rectangle here. Respect this area once again. Okay, and then move higher to attack some internal liquidity left right here. Perfect. What we know now is we want to be shorting. Look at the liquidity we're building at the lows. We are currently inducing buyers and setting them up for a trap. So why is this important? I'm going to remove this box. I can't. I'm going to have to do this. There we go. So again, we take out this internal. Why is this important again? Same thing. If we get reactions down here, false, trap. Okay? Then what we want to see in order to take a trade, we want to see a liquidity block built. We have a liquidity block here. Perfect. Number one. Number two is we need to see some sort of buildup. And I could go on to the lower time frames and open this up a bit, but I want you to train your eyes as well. You can see we've taken out this low, okay? And then we've continuously bumped our heads back up into this high once, twice, and respected it both times, building liquidity above this high, okay? And then finally spiking above it. This right here is an entry. 100% an entry. Why? we have everything we need. We have a liquidity block in order for us to take an entry off of. So we take that sell here. Stop loss goes right above this high. Perfect, because that's going to essentially support our sell entry. And then we target resting liquidity in the opposite direction. Okay, as simple as that. Now, if you miss that, no worries. Sometimes we even get more of a confirmation entry. Meaning, look what happens over here. We have another liquidity block built for us. Perfect. Now, again, we need to see some sort of buildup. So what I always say is we have the liquidity block built, but now we need a buildup to occur. So here is our buildup. And then we get price pushed up. To take that buildup out, here's that sell entry, and boom, back down we go. Okay, and look what we have here. Again, I could have gone into the lower time frames and opened up this PA bit, but I want to train your eyes. We take out this low. Okay, price runs back higher, respects this high, like this, and then trades lower once again, building liquidity at the lows, respects the low, false move up, internal gone, mitigation of liquidity block, and then sell. Okay, so now, what I want you guys to understand is, here is entry number 1. Here is entry number 2. Okay, both very valid, both very repetitive. Same thing. Now, what a lot of you guys will do is once we start selling off, let's just say this is the H1 time frame. What a lot of you guys will do is when this low gets taken out, to start looking for some sort of longs, failing to understand that this is still left. So even if we took this low out right here, even if we traded below that low and went bullish, this move from A to B, okay, I'll circle it actually. This move from low to high is not a move you want to be involved in. Why? We simply still have liquidity to the downside. Understand the current sentiment, the current narrative. Where did this whole setup come from? It came from this move from A to B to the upside, with how we induce buyers and then built liquidity. So if that's the reason why you're looking for sells right now, why on earth would you be looking for buys below this low when this one is not taken yet? Right? You'd be setting yourself up for a low probability trade. And again, don't get me wrong, sometimes price will come down. Take out this low here and you'll see some sort of reaction higher. But again, and what I want you guys to understand is this move from here, A to B, is not a move you want to involve yourself in. Okay? Let them occur. If it occurs, no problem. Let them occur. But most likely price will just continue down to where the liquidity is sitting, below this low. Okay? So this is how you avoid losses. Don't take these kind of trades. Don't take one when you take out this low. Don't take one when it takes out this low. Start looking for buys when this low is taken out. And that's when all the liquidity is now taken out of the market, and that's when you can start looking for buys back up. Okay, because look now what we've left at the highs, liquidity, right? But in order for us to attack these highs, the lows need to go first, and that simply means our system and our strategy is aligned now. Okay, it's valid now to look for buys. Taking longs after we take out this low or just this low is simply just not valid. Okay, and that's how you're able to stay out of the low probability moves and continuously look for those high probability moves. Okay, so this is a short video, but again, powerful. Rewatch this and just understand this is all about understanding the current narrative and following along with it. Okay, and not trading against it, staying patient. All right, I hope you guys enjoyed this, and I'll see you guys in the next one.